Welcome to The Explainer. Today, we're diving into a story of some pretty brutal economic realities, but also some really surprising resilience. We're going to start with some grim news from the global economy, but you're going to want to stick with us, because where this story ends, out there on the frontier of AI and robotics, well, it might just change how you see everything. So let's just jump right in with this. A shockingly blunt admission from the Bank of Canada. I mean, listen to that. They're basically saying, hey, the economy's broken and we don't have a clear fix. And look, this isn't just a Canadian thing. It's a feeling that's echoing across central banks all over the world, and it's setting a pretty dark tone for the whole financial system. And it's not just talk, right? The hard data is backing this up. What you're seeing here is that foreign central banks are holding the lowest amount of U.S. treasuries in 14 years. Now, you got to think of treasuries as kind of like the bedrock of the entire global financial system. So when demand for them starts to fall, it's a huge signal, a signal that the U.S. dollar's dominance might be weakening. And that has massive implications for literally everyone. Okay, so from that huge macro view, let's zoom right into the crypto world, because man, the fear there is reaching an absolute extreme. Check this out, 11. The Crypto Fear and Greed Index, which basically takes the temperature of the market, is sitting at a dismal 11 out of 100. That is deep, deep in extreme fear territory. And this isn't some one-day flash in the pan. This level of pessimism has been just gripping the market for weeks on end now. And, as if that sentiment wasn't bad enough, a totally new kind of threat has just popped up, and it's coming from one of the biggest names in tech, Google. Their quantum AI team just dropped a paper that sent a whole new wave of anxiety rippling through the market. So what's the big deal? Well, the paper basically lays out a future where these incredibly powerful quantum computers could, theoretically, just crack the code that protects blockchains. They specifically pointed to Ethereum and estimated that over $100 billion in assets could be at risk. It's a really scary thought, even if this kind of tech is still years and years away. But okay, here is where the story gets really bizarre. Despite this chilling warning, $100 billion vulnerability, Ethereum's price didn't crash. No, in fact, it actually rallied. It outperformed Bitcoin on the very day the news broke. It's just a classic case of the market caring way more about what's happening today than about some scary threat way off in the future. And this brings us to a really crucial pivot in the story, because amidst all the fear and these high-tech threats, some assets are showing some shocking resilience. And Bitcoin is leading the charge. This chart right here shows a huge reason for that strength. The amount of Bitcoin that's actually available to buy on exchanges has just hit a 7-year low. This is what you call a supply shock, and it's a super powerful dynamic. The more coins get moved into long-term storage, into cold wallets, the less supply there is out there, which makes the asset scarcer and, in theory, a whole lot more valuable. And this builds an even stronger case when you throw these three things together. First, the global money supply is at an all-time high. There is more cash sloshing around the system than ever before. Second, like we just saw, the available Bitcoin supply is shrinking. And third, there's an estimated $320 billion in crypto-focused capital just sitting on the sidelines, waiting for the right moment. It's a pretty potent combination. Now, this dynamic of pressure and change, it isn't just a crypto thing. The entire tech world is going through its own brutal shakeout, and it's all being driven by the incredibly expensive race to dominate AI. This chart from Fidelity shows it so clearly, the winners and the losers. On one side, you've got companies that make the actual building blocks for AI, things like memory chips and data centers, and they are just soaring. But on the other side, software as a service companies, or SaaS, they've been hit really hard because all that investor money is rotating away from last decade's winners and pouring into this new AI paradigm. And this AI shakeout has a very real and very harsh human cost. This number, it represents about 30,000 jobs that tech giant Oracle just cut. A massive layoff. And they did it in a cold, early morning email to their employees. So why do something so drastic? Well, it was to help pay for their staggering $300 billion commitment to build data centers for OpenAI. This is a massive, massive gamble. And it just goes to show you the mind-boggling cost of just trying to compete in the AI race today.
So, as today's markets are churning and all this capital is getting consolidated into AI, let's zoom out one last time and see where this immense focus is actually taking us. And that is to the final frontiers of space and robotics.
The scale of what's happening here is almost hard to wrap your head around. By the fourth quarter of 2025, SpaceX is projected to be responsible for 83% of all rocket launches worldwide. That's not just a market lead, folks. That's a near monopoly on humanity's access to space.
And while SpaceX is busy conquering the skies, back here on Earth, the progress in robotics is just as stunning. This timeline shows how fast Tesla's Optimus robot is evolving. I mean, it's gone from a clunky early prototype to this sleek, human-like silhouette in a remarkably short amount of time. And it just hints at the incredible speed of innovation.
All of this progress, it leads to a fascinating final question. We're building this future of automated abundance, right? All driven by AI and robots. But in that future, what happens when the new scarcity isn't resources or energy, but the very robots we created to solve those problems in the first place? It's a thought that kind of flips our entire economic reality on its head.